wanting to work with startups is almost a loser guaranteed on its own because most of them fail. They don't have any money.
The exits that are required for what you're looking at, you'd have to hit an Airbnb or a Stripe in every single one. It's no longer that you're excited about a unicorn. It's that you have to shoot for decacorns. And it's like, the math doesn't math. Welcome back to VC Unfiltered. Great to have you here. My name is Lucas Poles, managing partner at Pegasus Angel Accelerator. And today we've got Carey Ransom, an old friend of the show, someone who's been in the space a very long time, not just as an investor, but also as an operator. He's going to share some insights with us today. Awesome. Carey, welcome to the show. So excited to have you here.
Thanks for having me. Great to be here.
So yeah, it has been a while since we've caught up. So honestly, I want to find out more about what you're up to and the BankTech Ventures as well as Operate. And so walk me through all the fun, cool things that you're doing right now.
Sure. BankTech Ventures has been just a really fun, in some respects, full circle opportunity for me as I look at the entirety of my life. I grew up in this small town in Indiana in a 100-plus-year-old family business. And because we were one of the bigger businesses in this town, I grew up with a family that was deeply involved in a community bank. And I grew up with my grandfather doing that. My dad ended up really taking his seat on the board. And when we decided to do BankTech Ventures, my dad was my first call. And I said, is your bank dealing with technology issues and trying to navigate how do you digitally transform and the changing customer expectations? And this was right in the middle of COVID. Yeah. And so not surprisingly, the answer was yes. And so I said, okay. I said, we're talking about putting a group of banks together around the country to really establish kind of a consortium approach where we can be the eyes and ears out there identifying the emerging technologies well equipped to work with and help make community banks better. We'll do that work. We'll do all the R&D. We'll do all the risk management and evaluating that they can do what they say they can do. And we'll make an investment in a small number of those, sort of your typical kind of VC type pipeline. We're going to go meet a whole bunch of companies and we're going to pick a select few. And we'll provide all of that work to our banks that partner with us. And all you have to do as a bank is just invest into our fund and you're part of the crowd. And, my dad, who's followed my escapade of a bunch of startups and all the things I've done in my career, said, I don't know if that's something we'll do here at this bank, but I'll at least have the conversation, right? And it turns out they said, this seems like a great idea. And so we ended up getting just over 100 banks around the country in 33 states or nationwide to agree to join this. And it has just been incredible fun to really bring a lot of that life experience of building technology companies, working with companies to implement and see that success on one side, the banks, and then on the other side, founders who are constantly frustrated and trying to figure out how to create more efficiency and leverage in working with smaller banks. And we really try to be that bridge between the two and have built this really fantastic ecosystem of great founders and companies and banks that really do want to continue to stay independent, but be responsive to their market and their customers so that they can stay relevant, competitive, and really differentiate themselves, particularly from other competitors they may have. I think the one thing I would say, just in final thought there, is we went in very openly saying we do not intend to be a venture capitalist in how we think about this. We are a strategic investor for the future of the community banking industry. And that means we have to be very eyes wide open about what is the proper growth rate, what is the proper capitalization approach that we should take for these various companies. Some of them might have a potential venture growth trajectory, but that's not our expectation from every one of these companies. And it's more important that we're working with responsible entrepreneurs who want to go build a good, durable business that helps community banks, because our banks are going to look much more keenly at, are these building predictable, durable companies that can work with us over the kind of financial return that they expect to get. And so we need almost 100% of our companies to be successful as businesses, much more than we need that unicorn fund returner to be, key in the portfolio. And our hope is we can get both.
That's super interesting. So I'm sure that changed that from a fund dynamics kind of standpoint. I mean, it feels like maybe you're acting a little bit more like PE than a.
We look much more like PE in that regard. That's right.
When you actually come through with these portfolio companies, like, are they like, how hands-on are you with them? Are you acting more like an accelerator where like you're actually getting like dive deep into what they're actually doing, or are you a little bit more passive with them actually just then passing them off to the bank as like, hey, here's X, Y, and Z?
We are super active, and that and that was part of what excited me. I mean, we can talk about Operate, which the whole idea of Operate was we're going to be super active because I don't know how to be any other way. Me as a passive investor in general, it just doesn't suit my personality, where I like to be involved. I'm a get my hands dirty type of person. And so sort of on the way in with any one of our companies at BankTech, I say, look, we may not even be your biggest investor, but I can generally assure you we're going to be the most active. And in almost every case we are. And it's not the same approach every time. But when we were designing the BankTech team, my view was we need people on both sides. And so our platform team, if you want to use that, is a much different type of thinking than a traditional VC platform team, because of the fact that our LPs are the likely partners, customers, beneficiaries of these companies. And so it's our LPs, but it's really all banks. And so we have a strong interest in building relationships with all banks out there, whether they're in the fund or not, because that benefits our companies. We certainly want to preference our investors first and foremost. And the things that we're doing, just intelligence about what's happening in the banking industry, how can we help them build more confidence, make better decisions. I mean, we do programming with our banks to help educate them about trends and things happening in the technology industry. And then we're doing things with our portfolio companies to help them become better at partnering and working with banks. And it could be things such as creating third-party risk, vendor due diligence packages for them, so that we know they're ready to go show up and work with a bank. And we do that work because we can create best practices to use across our entire portfolio. Right now we're at 21 companies. We get leverage across all of those, not just one, if you're trying to do that in isolation as a company. So we can just create leverage and efficiency in unique ways because of where we sit and how narrow and curated the set of companies is that we're considering.
Awesome. Well, let's switch gears a little bit. Let's chat about Operate, because I know that you are you don't like downtime apparently. So you want to run a venture studio and a and a fund.
Yeah.
So walk me through Operate a little bit.
Yeah, so Operate's been a really, really fun transition for me as I sort of came out of serial operating roles across a whole bunch of startups. I think I did 8. And then I said, okay, I think I'm going to have to try to figure out this parallel entrepreneur path. And so Operate was sort of a first attempt to see how might we do that. And my partner Kyle and I, we started it now almost 5 years ago. And the original idea was to get involved with some really early founders that we could partner with and almost co-found their companies or be a first investor, extra hands and feet. And we said, we'll go find, as we think about it, and I think that this sort of still holds true generally, which is founders we can fall in love with that are working on problems that we can get excited about. So that way we'll devote some time and attention to it. And where we feel like we have some value to add. We can help de-risk it. We can give them a little bit of unfair advantage what might that be? And so it tends to live in and around areas where we've spent most of our career, which is sort of that intersection of software and data generally. And that was where we started. That's the majority of the companies and founders that we still work with. We're at about 30 companies today, and we have a different relationship and different ownership and different involvement in every single one of them. And I think that's the realization that we started to have very early on. And I think it's different. We call ours a studio because I couldn't find anything else that I felt like resembled what the moniker for it. But I think a lot of studios out there operate a little more like factories. They're trying to have the same process and the same ownership. And I just have this mindset that, every startup's a snowflake and a studio's an environment to create. And everything you create is going to be a little bit different. And we're comfortable with that. And so we have companies that were there at napkin stage and really helped get it out of the gate. And our role and where we played was a little different based on who the founders were and where there were gaps that we could potentially fill in. And we have others where we look much more like a super angel, even more passive investor. And we were just there to root them on. And so it really is pretty varied. And I think that's been comforting to just be okay with, hey, we don't have the same role to play in every one of these. And we had this instinct. Kyle and I both started a lot of stuff. We were like, at some point, we're probably going to have an idea that we're going to want to see born into the world. And I don't know what that'll look like. Do we go try and recruit a founder to come in and found it for us? Or what is that going to be? And a couple of years ago, after almost a year of tinkering on an idea, he and I looked at each other and just said, this needs to exist and one of us needs to run it. We're going to co-found it. And so we actually co-founded a company, brought in a third co-founder, and Kyle and my partner, Jason, they now run it full time. I'm the chairman of, and that's the first really from internal idea of ours that we felt so compelled it had to exist that we would start it. And that's actually slowed some of our activity down within Operate as far as new activity. We've made a few investments over the last year, and we kind of look at that as that's the thing we're going to do forever. And so, Kyle's off spending the vast majority of his time on Bonus right now and building that. I'm spending most of my time on BankTech and Operate. We have this great cadre of founders that we are still very attentive to and always happy to play any role we can. Still on the board of a few of those. And that we're really trying to, as best we can, push those out of the nest to move to the new heights where they should go. And we have some that are there. And so that's been a ton of fun. And, I wouldn't have projected when we started it where it would end up. But it's really been, for me, that next phase of life that I hope continues as long as I continue to have any relevance to offer to founders.
Let's move on to one of my favorite sections, war stories. So give me a...
I never lack for those.
So give me a war story. Give me something that where something went sideways, where something appeared where it didn't. Something just honestly just failed miserably, and a lesson learned, especially for some of the newer investors that are out there.
Sure. I think part of what's been fascinating is to see Operate's evolution. As I think back to when we started it, we got this really cool shared office space. We were going to create this physical place. This was, I think our lease started mid-November of 2019. And
great timing.
Great time. We signed a multi-year lease on this really cool property, and we were having events, and we're like, this is going to be great. And, not many months later, we were the only ones in there. And it was, cavernous where any word I said echoed because there was nobody else in the space. That was really a first learning of, oh, wow, we didn't have a business model yet. And he and I looked at it as an investment in this strategy that we believe was, let's get a bunch of great founders together under the same roof, and it'll be kinetic energy, and we'll figure some things out. And all of a sudden, the world was different. We didn't know how long that was going to be different, and we, as quickly as we could, thinking it was never going to happen, tried to sublease the space and got really lucky that somebody liked the space a lot and was willing to just take it over for a totally different purpose. And we were prepared to eat it, but it definitely was a relief, partly because when we started it, we were trying to figure out, is there a way to just kind of share this office and have sort of shared expense across a whole bunch of things that we're going to be involved with, and never really saw it as a profit center on its own. And I think that's been the challenge of that really early, whether you call it incubation or even through acceleration, kind of building early startups. As I say all the time, like, the business model of wanting to work with startups is almost a loser guaranteed on its own, because most of them fail. They don't have any money. And so I think you got to take this really long view. And we're now, 5 years in, and I still think all the time when it comes to operate, I go, I don't know if we're good at this or not. We're still probably a few years away from knowing for sure. And we're looking at some of those early indicators of, how likely are some of these companies to survive, to raise follow-on. We have some good ones that have become profitable and probably look a little bit more like more of my BankTech type of companies, where they've been scrappy, and the founders that I love that maybe aren't benchmarking themselves against raising $100 million in venture. I mean, we have one that she's raised $3 million since inception, and she'll do $50 million in revenue this year. It's like that's hard to and profitable. Like, okay, that's good. I'm quite okay that you own the vast majority of this company.
That's 100%. And I mean, COVID threw us all for a loop. I do think that
so it went sideways. I mean, it didn't totally fail, but it's still being written, right? And I think the solace I take is a lot of the money that we've put through Operate has been our money, and a lot of friends and family and family offices and people that said, I think these guys know how to create some value in the world, so we'll trust them. But it's been a lot of time and effort, really, and I don't think we ever aspire with that to have a huge capital pool, because I tend to also have a general belief that I don't think venture scales as much as a lot of folks have tried to raise capital around the idea of it being more scalable than maybe it is.
Yeah. Well, are you talking about the AUM of funds in general? But I'm honestly, I struggle with, if you have multi-billion-dollar funds, like, I start looking at the math of how power law works, and I'm like, I don't understand. Like, the exits that are required for what you're looking at. Like, you'd have to hit an Airbnb or a Stripe in every single one, and it's no longer that you're excited about a unicorn. It's that you have to shoot for decacorns, and it's like, the math doesn't math.
That's right. It's challenging. I agree.
There are definitely a couple firms in town that have stuck to their guns on AUM, and I've always been. I think when I first started in venture, I was curious, and maybe I don't think I understood. I was like, why are you guys, like, why aren't you going bigger, or like, why isn't that fun, like, continuing to progress? And I think a lot of people have that, but when you really start diving into the numbers, you're like, it just doesn't make any sense. Like, if you're going bigger.
Yeah, I'm a big believer in, try to feel like you have a handle on how you're going to deploy the capital that you have. And even when we started Operate, I felt like we were already on borrowed time in the VC cycle.
Yeah,
right? And
100.
so
Yes.
I told Kyle, I said, look, Kyle, here's my view: is if this cycle extends, the valuations are the most attractive at the earliest stage. At this
Yep.
point, when we started, if the cycle blows up, the best time to be in early is usually at a difficult time, because those will be
Yep.
hopefully the companies that you have incubation time on to navigate through. And that was the
Yeah.
thesis: is it's hard to predict where the world's going to go. It sure feels like we're at a near bubble, and it came a couple of years later, but we were pretty disciplined about not stretching too much on early valuation, because I just felt like that was going to be a likely losing proposition. So there aren't many that I feel like we overpaid because of just the hype.
Yeah. No, I mean, which is uh, honestly super encouraging. I remember even in 2019, like had similar feeling of like, like what is happening, and then COVID happened, and I thought we were getting a reset, and instead it went straight to the moon. And yeah, I was like, okay. I was like, this doesn't make any sense. I remember looking at some of the valuation. I was like, because I don't think I did a ton of deals in 21 and 22. And I'm just sitting here like, I don't like how,
Mm-hmm.
again, the math doesn't math. If you're coming to me at 15 or 20 and you're pre-revenue, I'm like, I don't know how the margin for error is so low. And
Right.
you being able to make it to that next round, it's like this is, and honestly, for the founders, I think honestly that was what hit me the worst, is that trying to explain founders like you don't want to do this because you're going to take a down round, and this is going to, you're going to get cut at the knees, and it might seem exciting now, but if you stay more disciplined at it, that you're going to have a much better shot of continuing and raising. And when we had the reset, it was like, this is not a time I want to say I told you so, but this is that point of time. So
Yeah, and I think having been on that side so much of my life, we sort of use, and it fits. I mean, obviously the bank tech strategy fits my personality, which is, it's great. Like I want to be in something that just fits the way I look at the world. And one of the things I say all the time in Operate too is this idea of no founder left behind. And I want to do any and all we can to try to get them to some kind of positive outcome, because as a founder, you're putting it all on the line in a very, very concentrated way. And especially if you haven't done it before, fully appreciating what it means to have so much of other people's money and pressure on that. Not everyone fully appreciates that. And trying to help them understand that, and try to navigate some of the decisions. Are you sure you want to do this? Do you fully understand what you're? And some do. They absolutely do. But I think we have to spend more time on helping them understand and appreciate what is happening.
let's move on to my absolute favorite segment. Eping literally set this segment ablaze a couple episodes ago. The conversation they had was in a group of like 200 angels, and just like he absolutely kind of tore into them, which was hilarious and fun. But the hot take segment has become quickly my favorite segment. So I would love to get a hot take of yours around the space, maybe something that people don't actually think about, something that either investors or startups kind of run through, but would love a hot take from you in general.
Yeah, it's one that I mean, it's almost counter to me a little bit, in that I think there's a predisposition for a lot of people to experience that whole adage of the multi-time entrepreneur is the one to back. And I mean, I've met with some recently that are very experienced, and they're trying to run the same playbook for this new company that they ran in a prior company. And when I press them a little bit on, explain to me the similarities and the differences in this business to your prior one, they just haven't done the work, in my mind, to really understand the differences. And they feel like this worked, we're going to go do this again. And this idea that those things work, the pace of change of the world continues to speed up. And so if you've been doing this for 25, 30 years, in that earlier era, things weren't changing as much. And the competitive response, the understanding, the transparency of information and access to information, all that's changing so rapidly that any capture that you sort of find or model that you find that works, I think is so much more easy for other people to discover. And we've seen it in just the number of replications or competitors that show up in any situation. I guess if it's a hot take, it's sometimes experience is actually a big detriment, because if you haven't fully broken down why did that work when it worked, and are those conditions actually the same now, I think you're actually more at risk of not succeeding.
Okay, so I could absolutely see that, because I'm putting this back into like sales for some of the portfolio companies now. Like when I tell them, it's like, okay, you have to learn growth hacking or guerrilla marketing. Like that's the initial kind of push through. I'm like, they're like, oh, well, give me examples. Like, well, I can give you examples from 5 years ago and maybe even a year ago, but they're already outdated. Like you have to be the one finding and being creative and running through those crevices of in between the systems, because the stuff that we used, even 6 months or a year ago don't work now. And so you have to be continuously, I guess, upgrading everything that you're kind of running through. So yeah, no, I appreciate that. That's a good one. And it's definitely a word for the wise, to, especially when you're running through due diligence. It's like, oh, you've done it multiple times before. Oh, it's fine. Like, let's actually dive in here a little bit more.
And I try to use the fact that, I have had so many different businesses with different business models and different customer segments, from consumer to small business to enterprise and direct go-to-market and channel. And it's like, I've kind of seen most of the starter approaches at some form. And I can't even tell you, as we sit here right now, that I can say this is exactly the right one. All I can say is there's work to be done to try to go figure that out, and go do the work. And if you're predisposed to only one way because that worked for you, at least test, is that the right way for this business, and consider that there may be others. And I think that conversation is always an interesting one for me with entrepreneurs, to just recognize, are they sort of, fixed or growth mindset? And there are plenty of entrepreneurs out there, as much as it seems weird to say, are more fixed. Like, here's how you do it. And like, how are you going to adapt when inevitably it doesn't pan out like you think? Because usually it doesn't. I don't care what your projections say when you don't have any customers, and even your growth levers are probably wrong. So
yeah,
I would rather you walk me through how you think, how you respond to things. That's going to tell me a lot more versus, your pretty spreadsheet. And that's why, I'm also not a big deck guy for early founders. And I think there's a school that says, hey, I want them to tell me the story and articulate their thoughts. And I always say, this is you on your best day, pretending like you have it all figured out. And I know you don't have it all figured out. And I'm quite okay with the fact you don't have it all figured out. What I want to hear is, how are you going to go try to figure it out? And take me on that journey. And that's where I can really start to gauge whether I can buy into the approach.
Awesome. Well, we could talk honestly forever, Carey, but I appreciate you coming on the show. Thank you so much for the time, and we'll catch you again here soon.
Always fun.
Thanks so much for joining us today. Always excited to have you here. Make sure to hit that subscribe button. We've got a great guest coming out next week. Look forward to catching you then.